All right. Hello, and welcome back to Inventory Watch. This is the weekly Phoenix inventory housing update for the week of September 24th. And I've got some interesting insights for you guys today. Let me just move my little bubble here. Okay. So let's get into it. I've been watching the Phoenix inventory for about 8 weeks now. And so I've got some interesting insights for you guys. I want to talk about new listings, right? The inventory has increased again this week, but I do want to talk about new listings coming to the market. Usually when we see a big increase in total active inventory, it's because we've seen an increase in brand new listings. In Phoenix, this is just not the case. We did have an increase in total listings, right? So if I look from August 1st to the 23rd to September 1st to the 23rd, those same like 3-ish kind of weeks, we had an increase in inventory. It was just about 1% increase in new listings. So we went from 58.54 to 59.14. The reason why this is important is because the active inventory that we're seeing isn't because we're seeing all these new listings come to the market. It's because demand has fallen so much that homes are taking longer to sell, and we're starting to see inventory start to rise. So I think that's important as we move forward and as we start to project, like our price is going to fall and that kind of thing. So just understand, yes, we did see an increase in new listings. It is about 1%. We're going to keep an eye on this number kind of as we move forward in inventory watch, because this is going to be pivotal to prices coming down. But let's take a look at total active inventory. So like I said before, total active inventory is up, right? And it's up 41% in the last 8 weeks, which is just absolutely insane. So we've seen just such a large amount of inventory on our market over the last 8 weeks. And again, like I said, it's because demand has fallen. So when we look at the pending data, it's going to be really important. But you can see in August, like total active inventory was up 35% compared from the first week to the last week of the month. And so it grew 35%. And again, not because there was this huge influx in new listing, it's because the buyers absolutely just left the market in August, and same thing for September. But I think what's interesting to note is that August, we saw the biggest shift in inventory, because that was the first time we saw buyer demand really pull back. Interest rates went way over 6% in the sevens. It was like some people were getting 7.5% to 7.8% mortgages, depending on their credit scores. And so that just made it super unaffordable. And so that's why we saw that. And we're starting to see that number kind of slow down, because I think it's slowly going to go from here. So the shock of it is over. That interest rate shock is now over. And then we're not getting as many listings to the market, and the buyers have kind of pulled back. And so I think we're going to start to see that weird balance of like, okay, this is our new level of inventory around this 15,000. And I think it'll slowly continue to rise, but it's not going to be that big shock and awe, like huge numbers that we saw in August, unless interest rates go up again, right? And we actually get over 8%, then we might see that next wave of inventory shock. So that's kind of what we're seeing. And that's why we have so much inventory right now. And when I say so much, compared to where we were in June, we're still very low comparatively for what we need for a balanced housing market. So our average list price in August, what was coming to the market was about $800,000. In September, our average list price is down about 2% at $785. So we are, and that's a 2% decrease, right, in just 1 month. So if we continuously see this, super low demand and buyers just like totally backing out of the market, if we see 2% every single month, we could be 10%, coming into the new year. For January, we could see prices come down. But I think the shock is kind of over, and I think inventory is kind of going to hold stagnant between 15 and 17,000. and not see like a huge increase like we did. So let's just kind of keep an eye on that, and we'll see where that goes. So that's supply, right? 15,000, right? So our market is supply and demand. So let's take a look at demand, because this is telling us a huge story. So these are all the numbers that I've been tracking over the last 8 weeks, and we can see that demand in August, these are weekly, right? So these are buyers out in the market every single week, looking at homes and putting offers in and getting them under contract so that they can purchase a home. So every single week you can see, like, basically we've just seen a downtrend in active buyers in our market. So right now, this week, we had 627 buyers out there that put homes under contract. And so you can see we had this huge decrease in buyer demand, and now you can see it's kind of like balancing out here. And so unless interest rates go up again, like towards 8%, we might just actually balance this demand level. Like, this is the new level of demand for the interest rates that we're at, over 7%. So the higher interest rates get, the more demand is going to fall, and the more inventory is going to continue to rise, because homes will take longer to sell at that point. So that's kind of what we're seeing. The average pending price is important because this will tell us the future of where home prices are going to be in the next 30 days, right? So if our average pending price is 540, right? But let me go to the next slide, because we're closing at 574. So it's a good possibility that we're going to see home prices come down in the next 30 days. If we're pending at like 540 this week, then in 30 to 45 days, we're going to see the average sold price come down, because right now we're at 574. And this was from 30 to 45 days prior is where the buyers were at. So again, our future looks like home prices are coming down in the next 30 days. How much, I don't know. So this is sold inventory. Again, this is how many buyers were in the market on average for the month. Again, this is a monthly average, 1241 to 1144, but last week, like, it was 627. So it's bringing our average down. So buyers are exiting the market because of affordability, and we're continuing to see that. The other thing I like to check is rental inventory, because the price of rentals is very important, right? All of these buyers who cannot afford to purchase will move somewhere. And it will be probably to a rental, because those are more affordable. But the rental market's interesting, and I'd love to show you what I'm seeing there. So this one's super interesting because rental inventory is also up, almost 40%, just like home buying inventory. But we're not seeing new listing inventory grow. Like with new housing inventory, we saw a 1% increase. We actually saw rental new listing inventory come down. From August 1st to 23rd, we had 2,700 homes, and in September, we only had 2,300. So we're seeing new listing inventory actually come down, which means that buyer demand is worse for rentals, not buyer demand, but rental demand is worse for the rental side of the market. That means there are less renters out there looking. And so this is key to note, because I think landlords will start to get kind of itchy, like, oh, I'm not renting. I need that revenue to pay the debt service on my investment property. And so I think we're going to start to see rentals start to come down if demand doesn't pick up. So that means that, like, buyers and renters are both boycotting the market right now. And you will see, and I posted something the other day about, like, Mark Taylor offering 8 weeks free to get into the rental. That's 2 months. They were offering 2 months of free rent to get people to go under contract on a lease in their apartment complex. And you will start to see property management companies do things like that in lieu of lowering the price, right? They don't want to lower the price. They don't want to bring market rents down. So they do things like that in order to entice people to come. Because what you can do as a renter is say, okay, I don't want 2 months free, but can you reduce my total rent over the next 12 months? Because I may not be able to afford that $2,500 rent. But if you take 2 weeks free and, subtract that from the total rental service, right? That'll bring that rent down to maybe $2,000 a month or something like that, right? So that helps bring rent down, right? And you're still in a 12-month lease. So there's things like that property management companies do in order to keep prices inflated high. So you may start to see rents not come down at first because they're going to try all those strategies and tricks, right? But then if that's not working, they're going to start dropping the rents at apartment complexes. You'll see homes that are on the MLS, they'll start dropping the rents and things like that. So it's starting. And so I think it'll be interesting to watch the inventory now until the end of the year. I think that it's going to slow down. I think we've seen the peak in inventory kind of rise right now. Again, unless we see interest rates go up even higher for mortgages, if we start hitting that 8%, it's going to pull things back more. So I think that's really interesting. So that's where we are with new rental listings. And so sold rental inventory, right? So we were averaging 500 a week, right? 589 for the first 3 weeks in August compared to 532 in the first 3 weeks of September. So we saw rental demand come down about 4%. And we saw, like I said, we didn't see a whole bunch of rents come down, right? It's less than 1% that rent came down. 24, 28 to 23.50, but we are in fact seeing rents slightly come down, right? So we are trending down in that direction. So again, the property management companies will do anything that they can to keep the market rents high with those strategies. But let's look at pendings because this is telling such an interesting story with rentals. So we were averaging 500 each week, right? Coming from July into August, and that's slowly been coming down. This last week, there were only 189 renters in the market who put things under contract. And the average pending price for rentals is now $22.26. So what did I say it was? For the first, it was $23.50. So again, this is going to tell the future of where rental prices is going. $22.26 is less than it was. So I think we're going to continue to see market rents start to come down, at least in the MLS inventory. And I think that's really interesting. So what does that mean? Where are we going? What's going to happen? So I think forecasting this out, it's interesting watching the economy. We did see the stock market pull back this week. It hit a level that it had hit, I think, in March. And so sometimes when the market hits a high like that and it bounces off, it just means it can't sustain that level. And so I don't think we're going to go above that level right now. There always is some weird stock market push towards the end of the year. So maybe in December, if it can go above that level, awesome. But if not, we may continue to see the stock market kind of pull back on equities. So if that starts to happen, I think people are going to freak out a little bit. I think we're starting to see people rely on their credit cards more and things like that. I did see a stat from the Fed. I might have shared it on one of my other videos where we have now officially hit over $1 trillion in consumer debt as a nation. So we have over $1 trillion in consumer debt, and 5% of that was 90 days in arrears, which 5% of $1 trillion is actually $50 billion in arrears. And so those are the people that could be thinking about oh, you know what, tapping the equity of my house, I can pay off my credit cards if I sell and go in that direction. So we may see some forced equity sales coming to the market. We may see sellers coming to the market before buyers actually come back, which will increase our inventory and help prices come down. So it just depends on how the economy is playing out with jobs and things like that. So that's basically where we're at this week. It's really interesting. Both buyers and renters have boycotted the market. Sellers are still boycotting the market. They're not really coming to the market with their listings. And so we're still at this weird stalemate where sellers and buyers are not participating in this market at all. But there are some. You saw that there are some. So if you need to sell your house, it's still probably not a bad time because inventory is so incredibly low. Demand is also incredibly low. But I do want to tell you guys, if you are confused if you should put your home on the market, I do have a tool for you guys to check your home and to see like what that kind of looks like. I'm going to take you to this website. It's mysoldscore.com. This is something that I put together so that you can instantly find out like where your home, if your home could even sell in this current market, right? Because every inventory or every market in Phoenix has different inventory. They have different supply and demand levels. So if you go through here, put your address in and follow this, it'll actually tell you, it'll actually pop out a score and tell you like, hey, your score is this. And if your score is over 50, it's more likely to sell in this current market. If it's under 50, it's like, there might be things that we can do as, real estate agents to help you with that. But, and if you don't know, I'm an analyst. I am a licensed agent as well. I'm not actively in production right now selling homes, but if you need to sell your home, get a sold score. Understand the supply and demand for your home and for your neighborhood. And a sold score is a great way to understand that. So that's all I got for you guys today. We'll see you guys next week.